Good day, and thank you for stopping in for another edition of Coffee with AJ. Glad to see you guys back out. Today's topic is going to be on the conversation of lines of credits and traditional mortgages. We have John Hahn here of TD Bank. Hello, John. How are you doing today?
Good. How are you?
He specializes in helping clients. He's our in-house mortgage broker. He helps many of our clients not only with their mortgages, but also with debt consolidating. So John and I were recently in a conversation about lines of credit and traditional mortgages for some of our clients, and what a great idea to bring them on today. So John, what is a line of credit instead of a mortgage?
Well, you can think of it as like a credit card, big lump sum credit card.
Okay.
You getting a line of credit against your property, and then it works just the same way as mortgages.
Okay.
So you can think of it as mortgage, but it's got the lines that you can actually use whenever you put down the principal amount.
Okay, what would be the benefit of using a line of credit versus a regular mortgage?
That's a good question, actually. A lot of times people go like, I don't want to hassle dealing with all different scenarios. But you got to think it this way. If you're an investor or principal residence owner, if you want to pay down debts faster, line of credit might be the best option for you. Okay. The reason why is the interest gets calculated on a daily basis if you go with a line of credit. For instance, if you have $50,000 that you want to put down towards your principal payment, if you put that money down to your regular mortgages, it gets calculated for next a month or to 6 months. You have to still pay the same interest that you signed up.
Okay.
But then, on the other hand, with your line of credit, any money that you put down towards the principal, it gets calculated next day, and hence the interest gets minimized.
Oh, interesting. I actually didn't know that.
Me neither, until I got into banking actually. Nobody told me.
Yeah, see, I thought the benefit of using a line of credit was because when you pay down your money, it's easy to grab to go purchase another investment.
Yes.
Now, what's the fear of a lot of, with all the overspenders, myself included, of having that available and pulling it out to go buy a boat?
Right. You could still.
You could do that, but in the perfect world, you wouldn't do that.
You wouldn't do that, because otherwise, like, you'd be tied up with a mortgage forever.
Okay.
Because you could keep spending the money that you put down towards the principal.
And not really setting yourself
Not really setting down to that free life.
Okay.
But then that's why it's good way of adjusting this lifestyle. If you go 100% line of credit, a lot of times we do get into that loopholes.
Okay.
But if you set up a right ratio, because everybody's got different ratio.
A ratio? What do you mean by a ratio?
Ratio is like this. You could get 100% traditional mortgages or 100% traditional line of credit.
Okay.
But if your lifestyle depends on spending much money now and then pay them later kind of lifestyle, I don't recommend doing 100% line of credit.
Okay.
Just because the problem is...
Because it's available to
It's
spend.
available anytime. If you see a nice boat, you grab it. If you see a nice car, you grab it. There's nothing wrong with that.
You want to go on a skydiving trip?
Yeah,
you
there
go.
you go. But then, we'll have to sit down together and then find out what your real number is. Everybody has different numbers. So in that way, for me, it's nothing more than 10% of my whole ratio. 10% is my maximum ratio. Okay. So I'll get 90% regular mortgage products and then 10% line of credit.
Now, how do you qualify for one of these lines of credit?
It's very easy actually. It's the same way that we do for the mortgages.
Okay.
There's one trick though, like you cannot go beyond 80% loan to value, which means if your house is $100,000, the maximum you can get is $80,000 out of that.
Okay.
And it's all income qualified. So you have to see if you're making a certain amount of money, they'll qualify you for a certain amount of mortgage.
Okay.
Yeah, so anybody who wants to go with the 5%
so same as a regular mortgage
exactly.
anyway.
Yep,
You still
same
have
idea.
to qualify for it. You just need a minimum of 20%.
That's right. That's right. Yep.
Okay.
Yep.
And then from that point, it may or may not be beneficial for some people.
May not.
It may or may not be beneficial for people to, depending on you talking to them, figuring out what's best to split it. There's multiple different options.
Absolutely.
Okay.
Yeah.
Well, if anybody has any questions, how do they get a hold of you?
Oh, they can call me at my number 604-773-6397, or they can email me. I prefer emailing because I get.
What's your email site?
It's John, JOHN, .hahn, HAHN, @td.com.
All right, so there it is, ladies and gentlemen. Thank you very much for stopping in. If you have any further questions on this topic, or any mortgage topic that is, feel free to contact John at either one of those contacts. And you know us, extremerealtor.ca. As per usual, we are taking customer service to new heights to land you the deal. Thanks for stopping in for another edition of Coffee with AJ.
Thank you.